Mexican-focused Minera Alamos forecasts annual gold production of about 140,000 ounces by 2027. Stock is up 50% this month. President and director is Doug Ramshaw. Doug, welcome back to Kitco.
Yeah, it's good to be back with you, Michael.
Bring us up to date with the company, Doug. You expect some production out of Santana this year?
Yeah, which is a blessing for our shareholders because we did what you don't want to do as a producer, but it was the right thing. We scaled back production last year, protected the balance sheet. We're now in a position to advance operational performance at Santana in 2024 and 2025. So a welcome bit of news for our shareholders we put out in February and then followed up in April with, yep, the plans are a go.
What's the other work that's set up for this year, Doug?
Well, we're waiting on, we got the Mexican elections, but we're waiting on the permits at Cerro, which is a big part of that production profile we're talking about. Cerro is in permitting. It's a base case 60,000 ounce a year operation. We're permitting an upside case, which is more like 85, 90. And we have a funding package that's already prepared, ready for receipt of permits. So we get permits, we draw down that funding package. It's about a 6-month construction period, and we're up and running. So, if those permits come sometime in the second half of this year, Cerro should be up and running, kind of mid-2025. And it's a huge step up in our production profile from Santana. It's just a bigger project all round, and again, a low capex build, and also a very low op cost perspective as well. We're talking sub $900 AISC life of mine.
You mentioned it. How's Mexico doing right now? We do have that general election coming up.
Yeah, I mean, I think in an election year, you tend to not see a lot of progress, and which builds off the lack of progress we've seen in the last year and a bit. I think we're starting to see some green shoots. The current president's party is likely to stay in power. His heir apparent that's running to be the next president of Mexico, Ms. Claudia Sheinbaum, I think has already, in some ways, suggested a slight softening in the stance from her predecessor, or future predecessor, I guess. She was up in Sonora recently extolling the virtues of Mexican copper deposits and lithium deposits to help with the EV transition. Well, little message there, Ms. Sheinbaum, those deposits are open pits, or would need to be open pits. So, there's been a lot of noise. We're going to see a lot of noise in the US in election year, in Europe, where there are various elections going on, Canada. We should be no stranger to noise in Mexico during an election season. And we've had it in spades. So it's created a backdrop of more uncertainty than I'm sure our shareholders, us as a company, or an industry that realizes and recognizes Mexico as a good jurisdiction historically to operate in would like. We are big believers that in time people are going to look back and go, what a great opportunity that was in Mexico, because I think things will revert to the mean. And it is still a very prospective, low operating cost environment to build mines. So we want to build many more mines in Mexico than just the first one we've got up and running now.
We were talking off camera, Doug, and you had that stock move, but you're calling it more of a catch-up, if anything else. We have seen this significant rally with metal prices, several all-time highs for gold. I saw that copper futures were at an all-time high last week. Yet, we haven't seen a tremendous lift out of the gold miners, and then also the precious metal juniors still are having a tough time about it.
Yeah, I mean, Q1, we most certainly saw kind of the first margin expansion for the bigger producers, probably in 2.5+ years. Q2 is going to be a tremendous quarter as well, but there'll be a lag effect for that, in terms of reporting those quarters. So I think we're already starting to see that come through. I mean, the reality is, although we were dealing with record high gold prices, we were also dealing with very sticky operating costs in the big tier one jurisdictions. So we needed this move in gold to have that margin expansion. I think that will feed through very nicely into Q2 and beyond numbers, so long as gold stays up at these levels. I mean, for us, we, you know, we designed our mines to operate in a lower cost environment. I think you should only build mines that can work in whatever gold price environment is thrown at you. And if you happen to catch a spark and gold is taking off when you're building, so much the better. But I think we're already seeing some signs of a healthier market with some M&A. It's not been huge on that front, but there've been lots of smaller M&A deals and some other bigger ones, which I think also send the right message to generalists and investors alike that these companies acquiring assets, are recognizing value, perhaps before it gets priced out by continuing equity performance.
How are gold companies gaining exposure to copper, Doug? You see Bristow, he was making his announcement for more of a focus on copper assets. You have your own copper subsidiary.
Yeah, I mean, I think he was talking about copper quite wisely, actually, a few years back. Before copper had that run in 2021, I think it was, there was a lot of market rumor out there that he was looking at Freeport as an example. Copper ran, and it basically priced those kinds of deals out of the market for him. So he hasn't participated in gold M&A in the space. He's been actually quite a critic of a lot of the M&A that's gone on. And instead, I think he's doing a number of things on the copper side, where with big, like Reko Diq in Pakistan, I mean, it's a big copper gold system, right? So, he's still getting his gold as part of the metals mix. But, I think we'll start to see, for these big companies to get meaningful gold exposure to their reserve base and everything else, they almost have to look at big copper gold systems now. So, yeah, you might see, I think Newmont with Newcrest is probably upped Newmont's copper exposure. Agnico is the pure gold plate right now. That's certainly reflected in its outperformance relative to the other two big companies. From our perspective, surfacing value on a hidden copper asset that sat in a Mexican sub for us that we were, had no value attributed to, but we knew we could surface value for our shareholders, was a natural step for us. We started a process kind of last year. We're adding to it now with a view of having a separate, separate entity that is going to focus on building low capital intensity copper mines in similar fashion to Minera, its parent, focusing on low capital intensity gold.
Now, Doug, you've been advancing these projects, both gold and, as you mentioned, with this copper. I was interested about prices right now for actually pricing these projects and if they make economic sense. We've seen this recent run right now with gold and also mentioned with copper. But, are we at a different price right now? Are these things being priced differently and they're actually making sense economically? Or do we still need a little bit more time for the metals?
I mean, this is a very healthy gold price. I thought $2,000 gold was a very healthy gold price. The problem is we had a lot of legacy projects which were very sensitive to inflationary pressures, that really $2,000 gold wasn't enough for a lot of companies. So we are going to see a lot more free cash generation produced at these levels. I've seen forecasts of higher gold prices. It's quite possible that we have a strong second half of the year for copper. For gold, I was surprised at the move in the front half of the year, to be honest. I was expecting 2024 to be good for gold, but more in the second half of the year. So is some of that priced in? This is we are going to be at some point be entering a period of interest rate cutting, and gold has performed historically very well in the last 4 rate cutting cycles. I think there's still probably upside on gold, but in reality, if you're building mines that can't make money at these prices, then you're probably building the wrong kinds of mines. And in fact, I still think that we should be, factoring in lower input prices on gold and stuff on the projects we do decide to build, so we don't kind of rinse and repeat the same cycle of maybe building mines which can work in the best of times, but don't work so well in the worst of times.
I had a question about human resources, Doug, and this was also goes to margins and costs. It's been it seemed that have been repeated with a number of guests that what's part of the margin challenges they have is just being able to actually find people right now, specialized people. And then I guess you can kind of blame this on its industry as right now because of its valleys and troughs that they have.
Yeah, I mean, labor short. I would have said a few years back, 4 or 5 years ago, I would say the biggest challenges facing our sector are permitting and water management. I would add human resources to that now. Absolutely. We've, just like our investors tend to be of the older demographic, I think the skilled workforce tends to be that way too. And we've got to find ways as an industry to encourage people into this great sector, and bring people through at the university level and with training and getting people into this space, because otherwise we're going to have a very big generational gap of talent. That's going to put a lot of pressure on costs. I think the operating costs in our tier 1 jurisdictions are going to be very sticky because labor and energy prices are going to hold them that way. It's one of the things we like about operating in Mexico, is the attractiveness of the labor pool there. There's a tremendous amount of in-country mining talent. Most of our team is Mexican. We want to keep it that way. So we do have the luxury of that. In fact, Agnico, who've obviously been a long time resident of Mexico in terms of the mines that they've had there, they recently took 12 of their skilled workforce from either La India or Pinos Altos, I can't remember, one of their projects down there, to the Malartic mine. I wonder if we'll see more of that kind of change, but the talent's there in Mexico, and it means that I don't think we have the same sticky costs that we see in our maybe safer jurisdictions or perceived to be safer jurisdictions, but that safety is coming with a big cost on margins right now, which is why we needed record high gold prices to see margin expansion.
Doug, thank you very much for your time.
My pleasure, Michael.
My name is Michael McRae. You're watching Kitco Mining.